What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is November 4th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got a critical update when it comes to Bitcoin and altcoins. We've got to talk about the updated price action since we retested the prior all-time highs here at the end of October, as we're now retesting the 21-day moving average. This is a critical dynamic to keep in mind. So we're going to be talking about price, the ETF inflows. October was a blockbuster month and something that the bulls can really champion on. But beyond that, I want to talk about what's going on in the altcoin sector, the bloodbath we've been seeing, and while so many people are starting to capitulate, how we could start to see some opportunities to go long in the near future. And beyond all of that, beyond Bitcoin and altcoins, we got to talk about what's going on in stocks, because I don't see enough people talking about the significant warnings we are starting to see in the stock market. So we're going to be breaking all that down in today's video. If you have the time, grab a cup of coffee, stick with me here, and consider dropping a like. As always, it's a great way to support the free content we put out here. But before we dive into the analysis, guys, you can use the timestamp if you want to just dive straight into the analysis. I just wanted to let you know that both Russ and I have decided to mutually part ways here on the DataDash channel. This has definitely been a difficult decision to make, but at the end of the day, we couldn't make it work from a business perspective. I think Russ is a great trader. If you guys want to, you can always check out his X account down below in the description. It's definitely been fun working with him over the past couple months. I think he's brought some really cool analysis to the channel. So just wanted to let you guys know about that. But nonetheless, the show goes on. We got to talk about what's going on here in Bitcoin's price. So the first thing I wanted to dive into here is this fade that we've had over the last week back into the 21-day moving average. This is really an important thing to keep your eye on, guys, because at the end of the day, the relationship between price and moving averages, in my years of trading experience, I've learned that there's a very significant degree of importance here. And there's a reason why moving averages, albeit they are very simple, hold a lot of relevancy, especially on these various time frames, because they can help you get an idea of the short-term trend, they can help you get an idea of the kind of mid-term trend and also long-term trend. So as we go down the moving averages here, especially with the 21-day, this is really going to help us in understanding how Bitcoin is holding up here over the past couple of weeks. Is it able to constantly set in generally higher lows and higher highs? And when it comes down for those lows, it's coming back into those pockets of the 21-day, simple moving average, and the EMA, and finding support. Are buyers coming in at this range and providing that bid side support to allow for price to accelerate to new highs? We don't care so much about how much it's accelerating here. We just care that so long as these moving averages are generally moving up, as they have been since back here in September, where they were constantly waning with lower highs and lower lows, that is a sign here that the bulls have really taken charge here over the last 2 months, or near 2 months. And that's a very important signal here when it comes to price. So it's critical to a large extent for that to hold. That doesn't mean that we can't come down into this pocket down here, but if you're really looking for that spring up, if you're really looking, I think, for that breakout in altcoins, we are going to need strength in Bitcoin first. And this is, again, an important thing to consider. Even though you might be wanting to just trade altcoins, we need that domino to set into place. We need Bitcoin to be able to continue springing up. And I can't think of a more bullish or exciting or euphoric symptom of a potential altcoin cycle coming around than Bitcoin continuously holding on that 21-day like it did back here after the launch of the ETF. Once it was able to reclaim the 21-day was that bid side support. Along with that as well, we also want to see the kind of price action, those kind of single-digit days where, a lot of people might see, for example, a 5 or 7% move in Bitcoin's price. We had a 4% one back here on October 29th, and then a 3% move back there. And a lot of people say, oh, no, it's too late to get into Bitcoin. No, in fact, I want to see that momentum. I want to see that there's that pulse in the market so that we can get up to those kind of highlighted figures that we discussed, like 80 to 90K. And that increase in Bitcoin market cap is going to allow for a positive trickle-down effect, hundreds of billions of dollars in additional market cap that will allow for more speculation and risk-taking in the small and mid caps in the altcoin sector. But that's a very important thing to keep in mind here. It's not that, again, we can't find a foundation down here. It just might mean that if we break that 21-day, it's not going to happen here in the near term. Bitcoin's going to need to find an established foundation on its long-term moving averages. So far, we were able to get out of the chop of that. Maybe we have a chance to make that support. Irrespective, our trade focus is on altcoins. And right now, Bitcoin is so far showing those initial signs that get things really exciting. If those of you who are wondering about when to go long altcoins, we're going to be talking about that in today's video. But so long as that 21-day holds, the bulls are in charge right now. That is a good thing to see here. I wanted to talk about the ETF inflows because this is a big reason why we saw the price action we saw throughout the month. Again, just kind of taking it back here to the chart throughout the month of October. really from these kind of lows here on October 1st, we can see that Bitcoin was able to rally upwards of 21%. It's now faded, of course, down about 13%, but still really decent for a month on Bitcoin, especially after all this chop. We've come up here to the highest price point since back at the prior all-time highs. So what gives? Well, the reason for this, as we've really emphasized here, guys, the ETF needs to show up. The ETF inflows need to be that range of support for Bitcoin that you're not going to get from just your average dollar cost averagers. You're not going to get from your family funds and hedge funds. We need that institutional capital to show up if we are really going to spur some kind of move here. And boy, did it show up in the month of October. We've now had a full complete month, and it was over 76 to 77,000 Bitcoin coming in over the last month. To put this in visual perspective, Capital on Twitter put a really great, HODL15 Capital put a really great chart up here. And it showcased that this was the biggest month we've had in inflows. After many months of just kind of neutral, single digit thousand, 10, 15,000 Bitcoin, right? Very low months here, sometimes having negative ones in the month of April, really getting hit by GBTC. This is the biggest set of inflows we've seen since back in February. Really great to see. As you all probably remember, and we've definitely echoed this in the Dash report or newsletter on the channel, I've talked a lot about how we need to get back up to those 30, 40, 50K months for inflows in order to really maintain price. It's a big reason why back in July we had this expansion as well from the early part of July here towards the same range we're at right now. It is no question in my mind, no doubt in my mind, why after a 50,000 Bitcoin inflow month back in July, we got that price action. It's the same reason here at 76,000, because it is not going to be the halving event that is going to drive Bitcoin much higher. The halving event has really lost its steam, and I'm certain that the one in the next 4 years is not going to do too much. What's going to matter here is, are there more incoming buyers, more market order flow than market sell side pressure? And that's going to essentially provide the not only bid side support here on pullbacks, but it's going to allow for the price acceleration, the premium in price to continue growing. And that is going to be absolutely critical for altcoins, because right now altcoins are not looking too good to most people. Altcoins are in a pure capitulation phase here. Whether you're looking at it in dollar terms, if you're looking at the Bitcoin comparative ratios, or just pure market dominance, right? Irrespective of how you look at it, altcoins have gone down, and others market cap here. This is really kind of all the cryptos excluding the top 10. We can see here that we've gone down from 242 billion down to 196 billion. So we're coming up closer on a $50 billion wipe here in percentage terms. That has essentially been a correction here of about a little under 20%. And since we really got out of altcoins back here in April, around this time range, right, this is down about 42%. So we're one of the few people back then in Q1. We were really warning about this, and we went to cash. We sold out of a lot of our meme coin positions. We did really good in Q1, and we're waiting for the actual proper signs of an altcoin cycle. A lot of people tried to jump the gun here. Some people got really lucky at picking the capitulative low and made some great returns in the short term. But at the end of the day, that 200 days still pricing as support. Now, I understand you might be wondering, Nick, okay, you sound kind of negative on it. Didn't you say earlier you're looking at maybe making some longs on altcoins? I'm absolutely considering that, right? There are a couple things I want you guys to keep in mind here. At the moment, we are continuing to pull back here. We are still seeing capitulation play out, and it could continue to play out for the next couple days, the next week or two. It could even be another month or so until Bitcoin really gets in the full swing of things, especially if Bitcoin doesn't hold on that 21-day. If it doesn't, and that comes down there, you could say altcoins are probably easily coming down to the lower end of that 200-week pocket at a minimum to retest the prior low range, maybe even going a little bit lower, right? So I wouldn't be surprised if that plays out. And that's again why I'm saying here that I'm not long positions yet. I'm not absolutely exuberantly bullish, but I think the risk-reward profile is getting more favorable. And when people start to capitulate and dominance starts to flush down in altcoins, this is the ripe environment where it essentially allows for institutional players, hedge funds, family funds, any wing of institutional capital, smart money, to be able to actually fill sizable bids and be able to provide that bottom alongside the additional buy pressure from market order flow as they continue to start formulating the trend and building even more position sizing. So that's a very important dynamic here. I think that they're setting up for accumulation. I think that something below this 200 week would really be a phenomenal opportunity. It may not happen. It might just be that we go into the 200 week here, so we got another maybe $10-15 billion to go. Irrespective, you'd basically be able to buy alongside the institutions, or if you want to play more kind of pragmatically and safely and wait for the momentum to arrive, just waiting for the 200 day to be broken, right? Paying a little premium, getting back above the short-term moving averages, but also the long-term ones that have weighed down price since. It's really a simple game. It's all about patience, guys. And that's the critical factor that so many traders, so many people in the market don't focus on when it comes to crypto. Altcoins are momentum trades, and we got to keep that in mind here. We take a look at others' dominance here. Others' dominance has collapsed from 10.5% in the short term down to 8.7%. That is down, again, from when we started to sell at 13% dominance. So for me, someone who's been in cash for a while, things are starting to look kind of lucrative. A lot of people are starting to be gloomy because they were holding positions and they're facing these losses. We're now looking at potentially building positions. And if you are on the other end of the stick, guys, if you've been in positions, I'm not here to give you guys a hard time and stuff. I've been there before. It stinks. But as people are starting to capitulate here, what you have to do is you have to inverse the crowd here. You have to inverse the kind of retail trend here in the market. And a lot of people are obviously panicking because we've broken the 7-year long line range of support for altcoin dominance with this general ascending channel. Now we're starting to break that significantly this past week and continue. So as we're approaching the 100 month, which has never been really hit here on the dominance metric, as we're approaching the prior capitulated lows from back in June of 2023 in altcoin dominance, this is the pain point I'm looking for. This is where I see a lot of sell side pressure and therefore giving me an opportunity to be able to enter in on a significant discount alongside other accumulators. And I'm certain that Bitcoin, if it goes up to 80, 90K, there is a very good chance. It's not a guarantee, but a good chance we could see an altcoin cycle play out. I think a lot of people were hoping it was going to happen here as Bitcoin started initially moving up, but if you look at history, that's not how it plays out, guys. Bitcoin usually leads first, and you have the flush down and dominance, and that's the sign where you can start to plan a couple weeks ahead before it happens, start accumulating, finding those solid narratives, and boom, you're gonna have the pop off, and these things can really start to roar. I don't think we're there yet, but I think our entry opportunities are coming here in the near future, and I'll definitely let you guys know when we're starting to think about that. If you want to know what we're exactly buying, when we're buying it, and what kind of general narratives we're really bullish on, as well as trade setups, we just put out this recent month's edition of the Dash Report. You guys can obviously check it out down below in the description. It's a great way to support the channel here. We give a whole range of features within the newsletter. I put out the 20-page plus report every single month, but beyond that as well, I do a mid-month webinar. We do our discussion group where you can chat with other traders. We have over 1,000 awesome and really skilled traders in the DataDash community who are part of the group. But beyond that as well, you get monthly trade setups, as well as different types of alerts around our trades and things we're watching, exclusive market updates, you name it. It's less than a cup of coffee a day, less than $1 a day if you guys sign up on the annualized basis. So if you guys are interested, feel free to check that out down below in the description. It's a great way to support the content. And even if you just want to sign up for the monthly right now, just for these kind of really exciting months, if you're looking to get some extra insights on altcoins, that's fine too. We talked about how to spot really good altcoin plays in this month's article. That was a big focus, and also how to know when the altcoin cycle is going to take off and kind of when where to start taking profits along the way. I think that's another big thing that so many people don't even think about ahead of time. They just get so caught up in the euphoria they don't have on the chart those target levels to start being disciplined and routine and take some profits. I wanted to again echo here the broader altcoin space. Look at some charts. ETH still continuing to bleed against the 21-day. I have no significant interest until we get above that 21-day, in my opinion. There's definitely an opportunity where we could, kind of buy the dip and everything. I think even actually in Russ's last video on the channel, I think he did a great job talking about this kind of risk-reward setup where you set a tight stop loss, you can let it really run up, and you can have a great risk-reward ratio. The only thing I'd say, though, is that depending on what we really expect for Ethereum to do over the next couple of months, my key goal here is to wait for some momentum to show up, because I don't think Ethereum has the steam to really go up to its prior highs, seeing the weakness in the ETF inflows on the institutional side. It's just my general opinion on it, but it's more about, at the end of the day, even if we think ETH can do like a 30-50% move or something as Bitcoin, or even 25%, that's great. Like if you can get this kind of large cap plays, maybe coming up here to the 200-day, maybe the 200 week if we're really bullish, and coming up here maybe at this prior range of resistance. 40% move against Bitcoin, that's awesome, right? We got to take those run-ups. But the thing is that I want to make sure at least I'm buying when I know that the momentum is there. And we haven't been able to hold in the 21-day. That has been your friend here throughout the whole process. It's why we've been really kind of bearish on Ethereum over the last, it's been almost 2 years here that we really held that significant opinion that it's going to keep bleeding against Bitcoin. Next up here, we have Sol, BTC. Continued lower highs here on price structure. This just to me looks like a slow but steady institutional distribution. People who bought a lot of cheap Sol off of the FTX bankruptcy. and are just selling into the narrative that there are obviously people out there who think that this is going to be the next Ethereum. It's going to be able to extend into the hundreds of billions and be one of those kind of safe, kind of medium risk, medium reward plays. I do not think is that. I think the moving averages have all flatlined here. We have lower highs. This looks to me like distribution, and it looks like we could be steadfast here to retest this price range around the 200-week here in the interim, especially if altcoins go through a bigger bloodbath. That would be, again, brutal for broader altcoin dominance, but of course the others metric is not including Solana, as it's one of the top 10 coin plays. I want to say again, if you take a look here, whether you're looking at the BTC pairings, whether you're looking at the dollar pairings, altcoins across the board are still rolling over. Render down here towards near the low range here back in August. I would really love to get a render down here, for example, at 280 or like around $3. That's going to be a range I would look as a point of interest here. And that's a great discount compared to where it was back here in March during this period of time and stuff, again, when we started to slowly move out of the altcoin space between March and April. We got Fetch as well. Fetch at its prior highs was at $3.48. I think you're going to get this in the 200-week here on a pullback, slight deviation below the prior lows, get a lot of people liquidated, and essentially provide that max pain scenario, coming to rest here on prior resistance. In the past, these 2 points, also back here as well. So somewhere in that ballpark between kind of the upper 50-cent range, 60, 70-cent range, that's where I would start potentially looking for positions if you're trying to kind of buy it during a range you expect some kind of accumulation. Again, you can always wait until we recover against the 21-day. You might pay a little bit more, but at least the momentum's there. PEPE, I think PEPE's got a very good chance to be able to come down here towards its capitulative lows from April. And from there, I think that provides a much more favorable area to start building some positions. Maybe it won't go as low. I would say between the prior lows here in August to the prior lows here back in April, that would be kind of the range where I'm looking for some entry points. So generally between this range of price here, a lot of people getting liquidated, a lot of people getting flushed out of their positions, and that's where I can see things start to whipsaw back higher for an altcoin cycle. And that, again, it's not going to be something that's going to give you your 5x returns, but something here that could give you like a 3.5, 4x return easily if we get an altcoin cycle, if Bitcoin really goes up to 80, 90K. We got to take those things, but that's amazing to get those kind of returns here, especially if you've got a sizable portfolio, if you made great returns in crypto over the last couple of years. Take a look here at Bread as well. Again, another significant lower high here, similar to what we saw back in August. Down so far about nearly 60%. I think that this is going to come down here again to its lows in August. Might be able to get an opportunity here where it flushes to slightly new lows and then wicks back up. Again, one of the big base ecosystem plays. I think that is not one to sleep on. And you got Ordi as well around the Bitcoin infrastructure and ordinals plays. This has been still stalling here since back in May. The 200 days providing ample resistance. That means we're going to likely come down in this pocket. The lower we go here, the more I get interested around these prior resistance points and support in the past. So there's a lot of different plays here across the board, guys. Super as well on the GameFi narrative, down a nice 30 cents. I think this is going to continue to go down below the moving averages, shake out a lot of people, and then it could continue to climb higher here. So I know there are a lot of different narratives, there are a lot of different plays out there. Again, in this month's report, I really talk in the Dash report about how to filter those plays to cut out like 95% of the noise and really highlight some plays you can put on your watch list, and how to use price as well as kind of market cap ranges to be able to really filter down to the plays you want to make money on in the altcoin cycle. But beyond that as well, it's all about making sure that you're finding the plays that are really holding strong in their respective narratives. So we've obviously got Bitcoin infrastructure, we got deep hidden AI, we have real world assets, and we also have GameFi as well. And speaking of GameFi, there was a huge announcement this past week that I wanted to share from Mythical Gamings. Now, Mythical Gamings is our sponsor for today's video. If you guys haven't heard about Mythical Gamings, they're a really cool project that's focused on a lot of the Web3 gaming ecosystem. They're one of the largest players in the broader NFT space as well, with the 4th largest NFT marketplace by volume. Mythos has been around for some time, and they've constantly been launching some major titles in the gaming space, with a recent announcement that they're going to be partnering with one of the largest NFT communities, Pudgy Penguins, to create a new viral Web3 mobile game called Pudgy Party. Now, essentially, this is focused on being a mainstream AAA Web3 game that, from what I can pick up, is going to have a lot of inspiration from some of the fun, kind of enjoyable games that a lot of people like to play out there, like Fall Guys and Fortnite, as the game is said to include action-packed rounds by dodging obstacles, finding optimal collection strategies, and outsmarting and outlasting your opponents. This to me sounds like a game that could do really well and really bring GameFi and kind of Web3 gaming as a whole into the major spotlight, especially when you have a large established NFT collection like Pudgy Penguins as kind of the initial community backing around the game. I think that that's going to give it a huge launch pad to succeed in the long run. And Mythical has been around for some time. They've launched a lot of games like Blankos. They obviously have the new Pudgy Penguins and Mythical game that they're launching. But along with that as well, they also have NFL Rivals. This has been one of their big predecessor successes within the ecosystem. So there's a lot of things coming out of Mythical here. And I think it's overall a project you guys should keep on your radar for the next couple of months, especially if GameFi makes a comeback. Now, at the end of the day here, from like a price perspective, while obviously Mythical isn't trending higher right now, most altcoins are bleeding in this market. I like above all that Mythical is remaining sideways here. It has been doing so since August, and actually it started to trend up slightly during that time. So I like to see strength in a period of time where a lot of people are capitulating and selling. Seeing the projects holding up here, I think it speaks to the fact that the market is getting excited about some of these releases. So definitely keep it on your watch list here. I think this has the potential to easily get back up to where it was back in the earlier part of 2024. But we're going to see how the game launches. It's coming out in 2025. It's one of the biggest NFT and GameFi projects in the sector, so don't miss it. Keep it on your radar. I wanted to go ahead here though and talk a little bit though about the macro environment. We talked a good amount about crypto here today, and there's definitely some signs of warning in the market right now that I want you guys to be aware of. I'm not screaming to the roof that it's a recession. I'm not here to say that stocks, for example, you couldn't trend higher here in the next couple of weeks. But the main point I want to emphasize is that as of now, there are a lot of alignments that are sending some very dire warning signs here. And I understand we've been kind of, previously over the last couple of months, we've been actually quite bullish. We've been taking upon a lot of opportunities in equities and in crypto in 2024. But I want you guys to understand that complacency can be all the difference between being able to make life-changing returns and actually getting to keep them. That's the big thing. Everyone can make money in markets as time progresses. It's a question of whether or not you can actually keep them and hold on to them. At the end of the day, we've got to talk about what the long-term chart is looking like here. We're at the 95-year long line of resistance since the Roaring 20s. And as you guys probably know, that is a long period of time. That is a very significant line of resistance. I know some people may disagree, but this is taking into account two of the most euphoric periods we have on record in U.S. equities. And the alignment of those 2 points, that, mind you, we are ascending over time using those two higher highs, right? So we've had nearly 2 retests here, both with the COVID stimulus, but also here in the AI era, where essentially everyone is expecting that AI is going to radically transform the world in the next year or two. And I have no doubt that it can continue to make a dent. AI is definitely here to stay. It has already started disrupting things. However, we are at some of the highest premium multiples we've been in this market in history. Right, when you're compared it to the actual measurement of GDP and the value of the stock market, this is the highest we've ever traded at, as we talked about previously on the channel back a couple episodes ago. That's essentially the Buffett index. And Warren Buffett, through Berkshire Hathaway, has the biggest cash position they've had in history. Even as a net percentage of their asset balance sheet, it's pretty stark. So I want you guys to keep that in mind here. The VIX is also continuously setting in these higher lows and consistent resistance here since the flush down here in August. And as you all know, or not, maybe some of you guys don't know, I'm happy to explain it, but essentially volatility expanding is usually not a bullish sign. Sometimes you can have hyper volatile and kind of uncertain environments where prices are moving higher, but usually this is going to be your sign, similar to what we saw back here in August for a flush down in markets. If this really starts to break up here into the upper 20-point range, we're already at 22.5, if this starts getting up towards, say, 25, 26, that is going to be your sign that some pain is coming. Now, where is the pain really going to come here? Well, it's going to probably come in the areas that are most overbought, and that's going to be coming in the form of semiconductors. Semiconductors that are the biggest benefactor of the broader AI trend, as they are building the shovels essentially to go out there and try to create value with AI, GPUs or graphics processing units. NVIDIA being the biggest benefactor and now sitting at a market cap of over $3.3 trillion. It is back where it essentially had its highs back in June. So for the last couple months, we've been stalling here. We were able to get back above here, but we're starting to notice that we're facing resistance yet again. After dipping below the 21-day the other day, we weren't able to reclaim it here. Now, seeing that stagnation at the 21-day is already concerning because it likely means that we've got a chance for NVIDIA to come down and test these longer-term moving averages, which we haven't actually really been doing on the trend. NVIDIA has been sometimes testing around the 100-day pocket, as we saw back here in September and also back here as well back in October of 2023. But we have yet to come down and touch that 200-day, and that's going to start to really signal here again, if we listen to moving averages, that the market is no longer as optimistic or seeing the kind of forward growth potential in NVIDIA, especially considering now that it's a $3.3 trillion company. It's pretty rational to be asking that question. Not to mention, there have been a lot of GPU purchases. The question is that infrastructure going to continue? Is there really the demand for those GPUs for existing use cases of AI? Not to say there won't be in the future, but it's a question of whether or not now. If we take a look at SMH, the broader semiconductor sector, this is really where the worry comes for me, because we haven't tested the prior highs from back in July where we had a near double top here. But along with that, we've got a lot of gaps to fill. So many people will miss this at the end of the day, right? It's just the reality of markets. But while I'm not saying gaps always need to be filled, many of you will understand that 80-90% of gaps usually get filled in the market. And we've got a lot of gaps here that could be filled over the next couple of months, all the way down here to it's $175 on the SMH ETF. That's a huge percentage correction from where we're at right now if we were to get that gap filled, right? Near 30% correction here in the sector. And that's already considering here that we've had a lower high here. So net overall, this is totally within the realm of possibility, 38% pullback in semiconductors. And what is that not only going to do for stocks? Well, for big tech companies, that's going to be definitely a damper on the trend as AI, as the narrative starts to cool down. But beyond that as well, it could also be a negative for crypto in the short term. So keep that in mind, that it could be a bit of a way down on what's going on in crypto at the moment. I'm not saying eventually this won't reverse back up and that the future isn't bright for technology. I'm just saying here in the short term, the market's clearly showing that we might come down and close down a lot of these gains from 2024, cause a lot of pain, and essentially allow for the foundation maybe for a further expansion down the line. But that could happen very quickly here over the next couple of weeks. We already saw that from the exact same price point, we were able to dip all the way down here to 200, right? A 40-point drop here, nearly coming up on 20 to 25, about 20% here, about 18 to 20% correction in a matter of just a few trading days. So if we get that big volatility spike, don't be surprised if this starts to hit equities as well as crypto. So just keep that in mind here, especially with the VIX building up. And as we continue to see the yield curve uninverting, treasury markets are starting to normalize. Yields are getting back to where they should be. And that is your initial sign when the yield curve starts to uninvert. It's one of the most consistent signs for an upcoming recession, or at a minimum, a bear market in equities for some period of time. So we got a lot to get prepared for, guys. I understand it can feel a bit mixed up sometimes because we're looking for some altcoin opportunities in the market, but it's important to understand that things like altcoin cycles can really happen in very short windows of time. And we can capture those, we can make some great returns, we can get out, but there are going to be a lot of people who get in and expect it to go higher and higher. They're going to be overexposed, putting all their money in. And neither of those things are things that we want to do. We want to play this smart. We want to be a bit cynical. We want to be able to get our positions here in the market, make our returns, and be able to get back into cash and wait for the bigger opportunities out there. And as we talked about here, I'm going to keep echoing it here. I think the big term opportunities are going to be in equities, guys. That was something that honestly, both Russ and I talked a lot about on the channel. I don't see crypto making the same kind of multiples it used to, and I don't feel comfortable allocating a large sum of capital to this sector much longer. It used to be so easy; you just kind of throw darts at it, and essentially you could make tons of money, life-changing returns in crypto. It's not like that anymore. It's a multi-trillion-dollar market, similar to equities. What we need to do is we need to get smart. We need to look for the kind of plays that could really be those next generational market leaders, like the big technology companies were in the last couple of years, or Bitcoin was, or altcoins were. That's why, again, if you guys are interested, check out the Dash report. We are going to be covering a lot of these sectors. We got a lot of market leader sectors that are in the kind of small mid-cap range that have that market scale potential and have been already producing killer returns in the market. So keep an eye on the dashboard if you guys are interested to check that out. I'll leave the link down below in the description. But that's it for today's video, everyone. Thank you so much for letting me ramble as always. I hope you guys have a fantastic day wherever you are, and I'll see you all in the next one. Take care, everyone.